Based on the historical data and forecast, Bitcoin has shown significant volatility, with recent price declines. The RSI indicates oversold conditions, particularly on September 23 and 24, with readings below 40, suggesting a potential for a rebound. The Bollinger Bands show that the price has been fluctuating within a range, recently approaching the lower band, further reinforcing the oversold signal. Considering these factors, I recommend a contrarian strategy, aiming to capitalize on a potential price recovery. My proposed strategy involves a staged entry. Initially, on September 26, 2025, enter a long position at $111,200. Set a stop-loss order at $107,400, just below the established support level, to limit potential losses. The first target price is $113,400, aligning with the recent resistance level. If the price reaches this target, consider taking partial profits. For the remaining position, move the stop-loss to the entry price of $111,200 and set a second target price at $116,000, representing a significant upside potential. This strategy combines RSI and Bollinger Band signals with support and resistance levels to manage risk and maximize potential returns. Based on the historical data and forecast, Ethereum has been experiencing a downtrend, particularly evident in the recent decline to $3,880 and the forecast predicting further drops to $3,740. The RSI consistently dipped below 30, indicating oversold conditions, while the price has been approaching the lower Bollinger Band. My strategy will focus on capitalizing on potential rebounds from oversold levels, while maintaining a cautious approach due to the overall bearish outlook. I recommend a long position entry at $3,850, coinciding with the forecast price and the lower Bollinger Band. Place a stop-loss order at $3,740, just below the forecast low, to limit potential losses if the downtrend continues. Set a target price at $4,100, aligning with the forecast price and providing a reasonable profit margin. To optimize the portfolio, I will incorporate a risk management approach by implementing a trailing stop-loss. If the price rises above $4,000, adjust the stop-loss to $3,860, securing partial profits while allowing for further gains. This strategy combines the oversold RSI signal, Bollinger Bands confirmation, and forecast data to create a high-probability trading opportunity. The portfolio will be diversified by allocating 60% of the capital to this long position and 40% to a short position targeting the $4,300 resistance level, with a stop-loss at $4,350 and a target price at $4,150. This dual strategy aims to capitalize on both potential rebound and continued decline scenarios, maximizing overall returns. Based on the historical data and forecast, XRP has been exhibiting a downtrend, with recent prices fluctuating around $2.8 to $3.1. The RSI consistently dips below 50, indicating a weakening momentum, and recently reached oversold levels below 40, suggesting a potential for a short-term bounce. The Bollinger Bands show that the price is nearing the lower band, reinforcing the possibility of a temporary rebound. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. We will implement a strategy where we enter a long position at $2.74, with a stop-loss set at $2.7 to protect against further downside risk. The initial target price will be $2.9, aiming to capitalize on a potential bounce from the oversold condition and the lower Bollinger Band. To refine this strategy, we will incorporate a dynamic adjustment based on the RSI. If the price reaches our target of $2.9 and the RSI rises above 60, we will consider taking profits and exiting the position. Conversely, if the price approaches the stop-loss level of $2.7, we will immediately close the position to minimize losses. This combined approach leverages both the oversold bounce and the RSI indicator to maximize potential returns while mitigating risk. The portfolio will be 60% based on the RSI strategy, 30% based on the Bollinger Band strategy, and 10% based on the support and resistance strategy. This is the most efficient portfolio based on the three strategies. Based on the historical data and forecast, BNB shows a generally upward trend, although with some volatility. The price has tested the resistance level of $987 and has been fluctuating within a range. The RSI has recently crossed the 80 threshold, indicating overbought conditions, while the Bollinger Bands suggest a potential pullback. Considering these factors, I recommend a strategic approach that combines RSI and Bollinger Bands. We will initiate a short position at $995. A stop loss should be set at $975 to protect against unexpected upward movements. The target price for this short position is $965, aligning with the forecast and the potential for a pullback towards the lower Bollinger Band. To capitalize on the anticipated upward trend following the potential pullback, we will implement a long position. After the price reaches $965, we will enter a long position at $965. A stop loss will be placed at $980 to limit potential losses. The target price for this long position is $1,000, aiming to capture the upward momentum as the RSI moves out of oversold territory and the price approaches the upper Bollinger Band. This combined strategy allows us to benefit from both potential short-term pullbacks and the overall upward trend of BNB, optimizing returns while managing risk. Based on the historical data and forecast, Solana shows a downtrend, particularly evident in the recent decline and the bearish forecast for the next week. The RSI consistently dipped below 50, reaching as low as 35.6, indicating strong oversold conditions. While the price has tested the support level of $180, the forecast suggests further downside pressure, potentially reaching $198. Considering the Bollinger Bands, the price has been nearing the lower band, reinforcing the bearish sentiment. Therefore, I propose a short selling strategy with an entry price of $212, a stop loss at $233, and a target price of $198. This strategy aims to capitalize on the anticipated downward trend, providing a buffer with a stop loss and a clear profit target based on the forecast. To refine the portfolio, I will incorporate a modified RSI strategy. When the RSI falls below 20, consider a long position with an entry price of $193, a stop loss at $180, and a target price of $211. Conversely, when the RSI exceeds 80, implement a short position with an entry price of $247, a stop loss at $233, and a target price of $211. The most efficient portfolio combines these strategies, prioritizing the short selling position due to the prevailing downtrend and the bearish forecast. This approach allows for capturing both potential rebounds from oversold conditions and capitalizing on the broader downward momentum, maximizing returns while managing risk. Based on the historical data and forecast, Dogecoin has shown a decreasing trend with fluctuating volatility. The RSI consistently moved between 40 and 74, indicating periods of both overbought and oversold conditions. The Bollinger Bands show that the price has been fluctuating within a range, and the forecast suggests a continued downward trend. Considering the RSI, we will implement a strategy based on the oversold condition. When the RSI falls below 45, we will enter a long position. The support price is consistently at $0.213, so we will use this as our stop loss price. The target price will be set at the resistance level of $0.237, aiming for a moderate profit. Specifically, we will enter a long position at $0.237. The stop loss will be placed at $0.213 to limit potential losses. The target price for this trade will be $0.237. This strategy combines the technical indicators to identify potential entry and exit points, capitalizing on short-term price fluctuations while managing risk with a defined stop-loss and target. The forecast data suggests a continued downward trend, so this strategy will be adjusted accordingly. Based on the historical data and forecast, TRON shows a downtrend, with the price consistently approaching the support level of $0.327. The RSI values are generally below 50, indicating a bearish momentum, and have recently dipped into oversold territory, hovering around 42.6. The Bollinger Bands have been contracting, suggesting decreasing volatility. Given this analysis, I recommend a contrarian strategy focusing on short-term bounces. We will enter a long position at $0.33 when the RSI shows a slight recovery from the oversold level, placing a stop loss at $0.327 just below the support level. Our initial target price will be $0.337, near the resistance level. To refine this strategy, we will incorporate Bollinger Bands analysis. If the price touches the lower band of $0.328, it signals a potential bounce, reinforcing our entry point. If the price reaches the upper band of $0.358, it indicates a strong upward movement, allowing us to adjust our target price to $0.35. This combined RSI and Bollinger Bands approach aims to capitalize on short-term price fluctuations while mitigating risk with strict stop-loss orders. The portfolio will prioritize the combined strategy, as it leverages both momentum indicators for enhanced decision-making. Based on the historical data and forecast, Cardano has shown a downtrend from September 12, 2025, to October 2, 2025. The price has been fluctuating within a range bounded by support at $0.725 and resistance at $0.792. The RSI indicates oversold conditions on several days, particularly around $0.806, suggesting potential for a short-term bounce. However, the forecast predicts a continued decline, with prices falling to $0.738. Considering these factors, I recommend a contrarian strategy focused on short-term gains. My strategy is to initiate a long position when the RSI dips below 20, indicating an oversold condition. Specifically, enter a long position at $0.753. Set a stop-loss order at $0.738, just below the forecast price for October 2, 2025, to limit potential losses. Aim for a target price of $0.8, aligning with the upper Bollinger Band and the recent resistance level. This strategy combines RSI signals with Bollinger Band analysis and incorporates the forecast to manage risk effectively. This approach aims to capitalize on short-term price bounces while protecting against the predicted downtrend. Based on the historical data and forecast, Chainlink exhibits a downtrend, supported by the declining prices from September 12, 2025, to October 2, 2025. The RSI consistently dips below 50, indicating weakening momentum, and the forecast predicts further price declines. Considering the RSI's oversold level of 20 and overbought level of 80, a short position strategy is advisable. We will enter a short position at $21.6, placing a stop-loss order at $23.2, just above the upper Bollinger Band, to limit potential losses if the price rebounds. The initial target price will be $20.1, aligning with the forecast for September 29, 2025. To optimize returns, we will implement a dynamic trailing stop-loss strategy. Once the price reaches $20.1, we will move the stop-loss to $20.3, securing some profit while allowing for continued upside potential. If the price continues to decline, we will adjust the stop-loss accordingly, ensuring we capture maximum profit. If the price hits the stop-loss at $23.2, we will exit the position. This combined strategy leverages the RSI, Bollinger Bands, and forecast data to maximize profit while minimizing risk, capitalizing on the anticipated downtrend of Chainlink. Based on the historical data and forecast, Wrapped Beacon ETH exhibits a clear downtrend, especially considering the recent price action and the bearish forecast for the next week. The RSI consistently indicates oversold conditions, particularly dropping below 30 on September 24 and 25. This, combined with the price trading well below the Bollinger Band's middle line and approaching the support level of 3,750, suggests a strong potential for further downside. Therefore, I recommend a short position. We will enter a short position at $4,500, placing a stop-loss order at $4,630, just above the resistance level, to limit potential losses if the price unexpectedly reverses. Our initial target price will be $4,190, aligning with the recent low. To refine this strategy, we'll incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, indicating a potential shift in momentum, we'll adjust our strategy. For example, if the forecast price reaches $4,360, we will move the target price to $4,040, and if the RSI remains below 30, we will maintain the short position. This combined approach, leveraging both RSI and Bollinger Bands, aims to capitalize on the current downtrend while incorporating dynamic adjustments based on evolving market conditions. This strategy is designed to maximize potential returns while minimizing risk through strategic stop-loss placement. Based on the historical data and forecast, NEXO shows a declining trend. The RSI indicates a significant oversold condition, falling to 34.2 on September 23, 2025. The Bollinger Bands also suggest a potential downward movement, with the price consistently approaching the lower band. Therefore, I recommend a short position strategy. Entry price should be $1.23, placing the stop loss at $1.31 to protect against a potential upward reversal. The initial target price is $1.15, aligning with the established support level. To maximize returns and manage risk, I propose a tiered target strategy. If the price reaches $1.15, take 50% of the position and move the stop loss to the entry price of $1.23. If the price continues to fall, the second target price is $1.14, where 50% of the remaining position is closed. This approach allows for capitalizing on the anticipated downward trend while mitigating potential losses through strategic stop-loss adjustments and partial profit taking. Based on the historical data and forecast, Bitcoin Cash is showing a downtrend. The RSI consistently falls below 50, reaching as low as 36.2, indicating an oversold condition. The forecast data for the next week projects a continued decline, with prices dropping from $556 to $508. Considering the support price of $528 and the current oversold RSI, I recommend a contrarian strategy aiming to capitalize on a potential short-term bounce. We will enter a long position at $515 plus $2, setting a stop loss at $508 to limit potential losses. The target price will be $540 plus $2, anticipating a rebound towards the center of the Bollinger Bands. To enhance the strategy, we'll incorporate Bollinger Bands. If the price touches the lower band, it's a strong indication of an oversold condition, reinforcing our long entry. The portfolio will be 60% focused on the contrarian strategy and 40% on the Bollinger Band strategy. This blended approach combines the RSI's oversold signals with the Bollinger Band's indication of potential reversals, creating a robust investment plan for Bitcoin Cash. This diversified approach aims to maximize returns while mitigating risks associated with the current bearish trend. Based on the historical data and forecast, POL-X-Matic exhibits a clear downtrend. The price has been consistently declining from 0.273 to 0.202, with the forecast predicting further drops to 0.202 and below. The RSI consistently hovers below 50, indicating a weakening momentum, and has recently entered oversold territory below 30. The Bollinger Bands show that the price is approaching the lower band, suggesting potential for further downside. Therefore, I recommend a short selling strategy. We will enter a short position at $0.226. The stop loss will be set at $0.233, just above the upper Bollinger Band and the resistance level, to protect against a potential short-term reversal. Our target price is $0.202, aligning with the support level and the forecast price. To refine the strategy, we will incorporate RSI signals. If the RSI falls below 20, indicating a deeply oversold condition, we can consider adding to our short position. Conversely, if the RSI rises above 80, it suggests a potential short-term bounce, and we could consider taking partial profits. This layered approach allows us to capitalize on the overall downtrend while mitigating risk. The portfolio will prioritize the short-selling strategy with a focus on the 0.226 entry price, 0.233 stop-loss, and 0.202 target price, adjusting positions based on RSI signals for optimal risk-reward management. Based on the historical data and forecast, Cosmos Hub exhibits a downtrend. The price has consistently been declining from $4.75 to a forecast of $3.77 over the last 2 weeks. The RSI consistently hovers below 50, indicating a weakening momentum, with readings dropping as low as 33.3, suggesting oversold conditions. The forecast data further reinforces this downward trajectory. Considering the support price of $3.72 and the forecast price of $3.77, we should implement a short selling strategy. My recommended strategy is to initiate a short position at $4.13. Given the oversold RSI readings and the downward trend, a stop loss should be set slightly above the recent high, at $4.2. The target price should be set at $3.72, aligning with the established support level. This strategy combines trend analysis, RSI signals, and support/resistance levels to maximize potential returns while managing risk. A conservative approach is warranted given the volatility and the forecast suggesting further decline. Based on the historical data and forecast, Litecoin shows a clear downtrend. The price has been consistently declining from $118 to $102, and the forecast predicts further drops to $96.2. The RSI consistently remains below 50, indicating a bearish sentiment, with recent values dipping into the oversold territory around 34.2. The Bollinger Bands are widening, suggesting increasing volatility, and the price is trending towards the lower band. Therefore, I recommend a short selling strategy. Enter a short position at $105, with a stop loss placed slightly above the upper Bollinger Band at $103 to protect against unexpected upward movements. The initial target price should be $98.1, aligning with the forecast price on October 1st. To maximize potential returns, we'll implement a dynamic target price strategy. If the price reaches $98.1, we will move the stop loss to the entry price of $105, effectively turning the trade into a break-even position. We'll then set a new target price at $96.2, coinciding with the final forecast price. This approach allows us to secure profits while minimizing risk. The combination of technical indicators and forecast data strongly suggests a continued downward trend, making this short selling strategy a high potential opportunity. Based on the historical data and forecast, Wormhole shows volatility with a recent upward trend. The RSI fluctuates between 53 and 76, indicating periods of both oversold and overbought conditions. The Bollinger Bands have widened, suggesting increased price volatility. The forecast predicts a relatively stable price around 0.107 to 0.111, but with potential for minor fluctuations. Considering these factors, I recommend a strategy focused on capitalizing on short-term price swings while mitigating risk. We will employ a combined RSI and Bollinger Bands approach with a primary focus on the forecast data. The entry price will be $0.105. The RSI is currently around 65, approaching the overbought level of 80, suggesting a potential pullback. The price is near the upper Bollinger Band, further reinforcing the possibility of a short-term correction. Therefore, we will enter a short position at $0.105 with a stop loss at $0.111, just above the upper Bollinger Band. The target price will be $0.103, aligning with the support level and a conservative profit target based on the forecast. This strategy aims to capture a quick profit from a likely short-term retracement, managing risk with a tight stop loss. Based on the historical data and forecast, Trust Wallet shows a strong upward trend, particularly evident from September 18 onwards. The RSI consistently moved above 70, indicating overbought conditions, but the price continued to climb, suggesting strong bullish momentum. The Bollinger Bands have been expanding, confirming this trend and indicating increased volatility. Considering these factors, I recommend a long position strategy. We will enter a long position at $1.23, coinciding with the first day of the forecast. The stop loss will be placed slightly below the lower Bollinger Band at $1.18 to protect against unexpected downturns. The initial target price will be $1.28, aligning with the forecast high, offering a reasonable profit margin. To maximize potential returns, we will implement a dynamic target price strategy. If the price reaches $1.28, we will move the stop loss to the entry price of $1.23, securing profits while allowing for further upside potential. If the price continues to rise, we will adjust the target price to $1.29. This approach combines the benefits of a technical strategy with a flexible profit-taking approach, capitalizing on the prevailing bullish trend while mitigating risk. The strategy prioritizes a balance between capitalizing on the upward momentum and protecting capital with strategically placed stop-loss orders. Based on the historical data and forecast, TRON shows a downtrend, with the price consistently approaching the support level of $0.327. The RSI values are generally below 50, indicating a bearish momentum, and have recently dipped into oversold territory, hovering around 42.6. The Bollinger Bands have been contracting, suggesting decreasing volatility. Given this analysis, I recommend a contrarian strategy focusing on short-term bounces. We will enter a long position at $0.33 when the RSI shows a slight recovery from the oversold level, placing a stop-loss at $0.327 just below the support level. Our initial target price will be $0.337, near the resistance level. To refine this strategy, we will incorporate Bollinger Bands analysis. If the price touches the lower band of $0.328, it signals a potential bounce, reinforcing our entry point. If the price reaches the upper band of $0.358, it indicates a strong upward movement, allowing us to adjust our target price to $0.35. This combined RSI and Bollinger Bands approach aims to capitalize on short-term price fluctuations while mitigating risk with strict stop-loss orders. The portfolio will prioritize the combined strategy, as it leverages both momentum indicators for enhanced decision-making. Based on the historical data and forecast, Kaia demonstrates a slightly downward trend, particularly evident in the recent forecast prices dropping to $0.145. The RSI consistently remains below 80, indicating it's not in an overbought territory, and has recently dipped below 50, suggesting a potential short-term bearish momentum. The Bollinger Bands are narrowing, which often precedes a significant price movement. Given these factors, I recommend a short position with an entry price of $0.15. A stop-loss should be placed just above the upper Bollinger Band at $0.165 to protect against unexpected upward movements. The target price for this short position should be set at $0.145, aligning with the established support level and the downward forecast. This strategy combines technical indicators and support/resistance levels for a calculated risk. The RSI below 50 reinforces the short bias, while the narrowing Bollinger Bands suggest a potential for a breakout. This approach aims to capitalize on the anticipated downward trend while minimizing risk with a strategically placed stop-loss. Based on the historical data and forecast, PAX Gold shows a clear uptrend with recent price action testing the resistance level of $3,770. The RSI consistently remains above 70, indicating overbought conditions, but the upward momentum is strong. The Bollinger Bands have been expanding, suggesting increased volatility and potential for further price movement. Given the forecast of $3,770, $3,770, $3,770, $3,800, $3,820, $3,810, $3,810 over the next week, I recommend a long position. Entry price should be $3,770, with a stop-loss placed just below the support level at $3,700 to limit potential losses. The initial target price is $3,820, aligning with the forecast high. To refine the strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI dips towards 70, consider a partial profit taking at $3,800. If the price touches the upper Bollinger Band, it indicates a potential pullback. In this case, move the stop-loss to the center of the Bollinger Band, which is $3,670, to protect profits. If the price breaks below the lower Bollinger Band, exit the position immediately. This layered approach allows us to capitalize on the uptrend while mitigating risk through dynamic stop-loss adjustments and profit-taking based on technical indicators.